Why do financial advisors even have jobs? Let's get into it. Hi, I'm Thatcher Taylor. Thanks for coming back to the channel. We're going to talk about why financial advisors have jobs, and make sure to stay tuned to the end. We're going to talk about if you should have a financial advisor or if you shouldn't have a financial advisor, and we're going to even discuss what the heck a financial advisor is. And before we move on, thanks for all the support. I appreciate it. Make sure to go like and subscribe so you get more videos, especially this video. This is the first video of all the newest, best edited, and highest quality content that I'm going to get, so it's only going to get better from here. Let's dive into it. Okay, so this all started from a tweet that I threw out, why financial advisors should even have a job. We're going to go through a few of these. I'm going to read my tweet, then we're going to go through a few of the responses, and then we're going to dive into the video a little bit more. Here's my initial tweet. Every single thing that I know can be found on Google, YouTube, and books, white papers, and on websites. If that's the case, why do financial advisors have jobs? It's a phenomenal question. And just a little background, I'm a certified financial planner. I've been in the business for like 13 years. I have my own RIA, but it is a genuine question that I run into all the time and I see all over social media. Why do financial advisors have jobs? But let's go over some of these responses first. This individual, to help people determine which knowledge from Google, YouTube, books, white papers, and websites actually applies to their unique financial situation and desired outcomes. Oh, you mean a financial advisor helps sift through all the nonsense? Right. This individual says, my personalized frameworks, personalized advice, and ongoing planning is what adds my value to the client relationship, which is exactly true. You can have all the information right there in front of you, but being able to figure out how to apply it, and not just once, but over a long period of time, which we'll discuss. This individual just made it simple. Coaching and planning. Individualized advice, accountability, partner, and financial expertise. Financial planning is a skill. There's a lot of information out there, but financial planning, being able to take a person's individual situation and find all the details and information, sift through it, and then apply it to your life to reach your goals is a skill. This person made a great analogy. It says, internet advice is often limited to general rules in the same way WebMD provides a general medical diagnosis. But despite the information received, people still question if they're okay. Like doctors, advisors bridge the gap between the basic application and the individual. This is the last one I'm going to read, and this is a perfect one before we move on. It is often that we go to the doctor and we get some sort of diagnosis, something that's customized to us and our body and our health, but we'll leave there still questioning it. Imagine in your financial circumstances, if you did the same thing, you would be questioning what you're doing all the time. An advisor helps eliminate those questions. Okay, next we're going to talk a little bit about definitions. What is a financial advisor? What is a financial planner? What is an investment manager? What is a broker? We're going to talk about all that here really quickly because it's important to note that a financial advisor and a financial planner a lot of times are not the same thing. And I got to set the foundation of what we're talking about today is, why do I need a financial advisor? Why do financial advisors have jobs? But more specifically, why do good financial planners have jobs? So a financial advisor is a broad term that can be used to describe almost anybody from real estate to investment management. It could be real estate agents call themselves financial advisors sometimes. Financial advisors call themselves financial advisors. Financial planners call themselves financial advisors. Hedge fund managers call themselves financial advisors. Private equity firm can call themselves financial advisors. Financial advisor is a very broad term. So we got to find out, if you're going to hire a financial advisor, what do you need to look for? I'm not saying this is a recommendation and the financial advisor needs this, but something that's very popular in the industry is what's called the Certified Financial Planners designation. It's run by the CFP board. It basically means that a person has met the ethical requirements, the educational requirements, and the ongoing educational requirements to bear the actual CFP mark. So it's Thatcher Taylor CFP, registered trademark. Thatcher Taylor Certified Financial Planner, trademark. I am attached to the actual governing body, which, being a certified financial planner, means in general that we're taking our planning or our advice to the next level. And by that next level, I literally mean putting the client's interest first. That's the ethical standard that we have to adhere to. Is A certified financial planner needs to put your interests first. A lot of times a financial advisor will just be an investment manager where they just want to know all the assets that you have and they're going to go invest them or trade them or buy and sell or utilize options or maybe just invest them in a passive strategy, and they're just going to bill you based off of the assets they manage, but they're not doing comprehensive financial planning. They're not evaluating all the other areas. They're just investing the assets. So it's important to move on to the next phase about what a good financial advisor does. With this image here, you can see a lot of the topic areas that financial planners, a good financial advisor or financial planner, will dive into. Not only will they dive into investments, but they'll dive into planning. And it'll be on an ongoing basis a lot of times. Sometimes if you're a do-it-yourself or you just want an advisor to build you a plan and you can implement it on your own, which is fine. But in this particular case, a really high quality advisor is going to be with you for the long term. They're not just going to manage your investments, which is important. Asset allocation, the investment types, fees, the trading methodology or lack of a trading methodology, which might be important actually. That's one piece of the puzzle. But the planning portion goes into tax planning, estate planning, goals planning, income distribution strategies, 529 planning. It could be a variety of different topic areas. Those essentially are goals, things that are important to you. How do we get to those goals? And then the ongoing element is life's always changing and the world around us is always changing. The government's always implementing new laws. There are new laws being passed with new taxes involved in it. It's happening all the time. It's always fluid. An advisor will adapt those changes to your specific plan to achieve your goals. That's why I always talk about the methodology. One, goals first. Goals always come first. What's most important to you? You build a plan to achieve those goals and then you invest your assets. That's the third piece to support the plan. That's it. We'll talk about this a little bit more in a bit, but there are studies that are starting to come out that show actual percentage increases to the value of clients' portfolios based on the decisions that they make. There are things that could add huge return like dynamic spending strategies, tax efficiency strategies, investment strategies, estate planning strategies to pass estates on to heirs as efficiently as possible. So there's a variety of things that can come into play. So now we're to the point where how much value can a good advisor, and I'm specifically talking about a financial planner or a financial advisor that does planning as well. I'm talking about a good comprehensive advisor. How much value can they add? I'm not talking about just the investment manager. There's a debate that say just an investment manager may not add much value alone. We're talking about good comprehensive financial planning here. This first bit of information I'm specifically getting from Think Advisor, an article. I'm going to put that article in the comments below so you can reference it. And while you're down there checking things out, make sure to like and subscribe. But the very specific number that they came up with was 5.2%. And they use a very specific formula for how they do this. They call it the ABCET formula. A is for the appropriate asset allocation. B is for behavioral mistakes. C is for the cost of cash. E is for expertise. And T is for tax efficient investing. So really quick, I'm going to dive into these quickly. A is for the appropriate asset allocation, helping clients work through their values and what's important to them so they're not investing in a way that doesn't help them achieve their goals and actually hurts them. Asset allocation is the mix between stocks, fixed income, and cash. B is for behavioral mistakes. I put a chart in here. The average investor over the past 20 years return was 3.5%. The S&P 500 returned 9.6%. So just from an investing methodology, human behavior limits our return when it would have just been better to ride the market. C is the cost of cash. Having too much cash laying around can hurt your investment portfolio over long periods of time. Having the proper amount of cash to protect you in the event of catastrophe and utilize for short-term goals so you don't have to sell off other assets, you can leave them invested for the long term, is a way that advisors can help add value. E is for expertise. It's all those other little details that we spoke about before, moving past just being an investment manager. And T is for tax efficient investing, but not only investing, managing tax decisions now and in the future. An example that would be, should I put more money in a 401k pre-tax, or should I put it post-tax Roth 401k? Another source of research is Vanguard's Advisors Alpha that said maybe 3% could be added. So we have Russell Investments saying 5.2%, Vanguard Advisors Alpha saying 3%, and then just like I mentioned before, JP Morgan mentioned just on an investment perspective, you could add maybe 6% depending on how your investment behaviors are. So it's important to know that we've got to this point, we've understand that there's value that can be added from a financial planner. There's no doubt about it, especially a good advisor. So now we're going to talk about when not to hire a financial advisor. The place that you don't need to hire a financial advisor, the crossroads that you meet, is when you have the time, the willingness, and the ability to do it on your own. I worked at Vanguard for 5 years in the ultra high net worth department, and that basically means that a lot of those clients, if not all of them, were self-directed. They were doing it all on their own. So I have a strong affinity towards self-direction, and you can reach your retirement goals happily and comfortably by doing it on your own. But it takes a ton of time. You got to have the willingness to do all the research, like I mentioned before, sift through all the junk and bring it back together, and you got to have the ability. You really got to have the ability, the skill that takes time to develop to be able to achieve those goals. You don't need to hire a financial advisor when you think you can do it on your own, and not just once, not when you're like 56. It's you do it at 56, 57, 58, 59, 60, and every year until the day you pass away and you can handle it on your own. Now, this is an important piece to enter in a segue where there are financial advisors out there that do these types of projects hourly or on a fixed basis where you can still do it yourself and get some guidance from a really, really high quality financial planner along the way. That's something you could be looking into as well. So there's somewhat of a hybrid model. But in general, if you don't even want to do that, that still takes time, the willingness, and the ability to manage it and implement it on your own after the recommendations come in. But if you don't have that, maybe it's time for you to get a financial advisor, and a good financial advisor. I hope that really nailed that home here today. If you want to describe it a little bit differently, it's when the cost of an advisor exceeds the value. So if you think you can implement all the value that we've discussed about investing and tax efficiency strategies and guidance and behavioral coaching, if you think the cost of an advisor to do that for you in particular exceeds the value that they would bring, that's the point where you don't need a financial advisor. You can also see here there's a hierarchy that I've added in. There's an image, it's a pyramid here, and you can see kind of the baseline where we're at the bottom. The foundation is encouraging consistent investment savings. There's a really cool image here where you can look at the hierarchy of advisors' value. I took this from an article. I'm actually going to link that down below from kitsis.com. But this is a really good thing that a high quality advisor has put together where we're going to encourage consistent increased savings at the bottom all the way to security breakdown at the very peak. You can see there's a lot of stuff happens between cash and investing that where an advisor can add value. So the answer when to hire a financial advisor is when you don't have the time, the ability, or the willingness to handle this all on your own. You really need someone to handle it for you. A lot of my clients come to me and they go, I just don't want to think about this. I just don't even want to deal with it. And we develop trust, and I find out what's important to them and their goals and how to get there. Nothing more. Their interests come first. If you're in that position, that's where you need a financial advisor. And this isn't a downside. That's why you got to get someone that's really high quality and someone that you can trust, that's putting your interests first, so you can comfortably live your life doing the things that you want, and you don't have to worry about all the controversy and the costs and getting sold things that you don't need. It's about finding a quality advisor that we've discussed quite a bit here today. You can see here's that breakdown again of all the things, the investments, the ongoing, and the planning that an advisor can do. All these things come into play. It can take time and be very, very difficult on an ongoing basis to implement. This is when a financial advisor or financial planner comes into place, when you believe that this might be a little bit too much for you to handle. So going back to our original question, why do financial advisors have jobs? In a nutshell, financial advisors have jobs because they're going to be there to help determine what information out there from the world that we live in where there's too much information. We're going to help find what information applies to you and your goals and your future and how to get there. And that's it. A lot of times you can get all the information set right in front of you, and it's still sometimes difficult to decide what is going to be the most valuable elements to push the needle. That's what a good advisor does. That's the skill. That's what you're paying for if it fits your particular situation. If you have any more questions, you can always contact me below. I'll put some contact information down there. Or if you're really curious and you're just learning about your wealth building journey, you can go download what I call the Retirement Mega Pack. It's got a checklist, it's got a flow chart, and it's got an ebook just to help get the juices flowing about your retirement journey. If you have any questions, feel free to reach out to me. Make sure to like and subscribe and check out some other videos. I appreciate it. See ya.